Hey everyone, welcome to this episode of the Optimism Show. Today we have Jarrod Dicker, who is an investor and is coming from traditional media, has covered quite a lot in on-chain media, and I'm really looking forward to this conversation and covering some of the traditional and on-chain media aspects and developments that are happening over there. Welcome, Jarrod.
Thanks, Kris. Thanks for having me.
My first question actually is, since I know when we talked last time, you used to be in traditional media. Like if I'm not wrong, you worked for the Huffington Post and Washington Post.
Correct. Yep.
And one of the main things that you mentioned there is that trust and provenance and therefore the lack of it in the traditional media space is what got you into the on-chain world. Would love
Yes.
to hear like your perspective, like what was that actual pull that was like, okay, we have to go this way if we'd like to keep the integrity of media.
Yeah. Yeah. I mean, I'd say I always like to say like media is very vast. Like we talk about media, especially in crypto, we talk about media as very specific things, but the reality is that most of the internet is media today. You know,
Understand?
how individuals kind of like represent and communicate online to establish brands and independent creators or YouTubers and so forth. So I preface with that because my role previously, as you mentioned, like I was at the Huffington Post and at the Washington Post, was very much in like news media, like very capital J journalism, providing a service where people are getting daily information, whether that was, politics, spanning to entertainment and so forth. But that gave me a very interesting lens into, I think, some of the challenges that were happening in the space and I think have since evolved and proved to be somewhat challenging for the news media space. And one of which was just in the early days, the emergence of the internet, right? People that were managing a lot of these media companies were very comfortable and used to the fact that they had full control. They had full control of their readers. They had full control of information, the navigation paths. It was their role to effectively give their reader or their consumer the journey, in which case that they felt, should be delivered. And that completely changed. And that's like a tale as old as time, where like Craigslist came and killed the classified business, and then Google came and changed the way that people seeked information to Facebook and social networks, where individuals were sharing content and most of the referrals and traffic were coming from that. And now we have like ChatGPT and AI, which is another arguably probably like the hardest hill to climb for a lot of these traditional media companies. But one area that I felt was very, very interesting that was being challenged at the time was this notion of kind of like information, like people not trusting information, not knowing where it came from, looking for validation of sources, and effectively just being able to know whether or not what they're consuming is real, or have more information behind the information as to like why something is being written, or the truth or the validation behind that. And this kind of happened mainly at the Washington Post. I'd say around like 2016, Trump came into office for his first term. And I just time it with Trump. This wasn't because of Trump. I just time it with that because I remember it very, explicitly. But there were kind of like two major headwinds that were happening in the news business. One of which was this notion of deepfakes and fake news. And in the States where I live in New Jersey, but in the United States, the biggest issue with kind of provenance and disinformation was really through the social networks. It was Facebook, it was Twitter, people sharing links, paraphrasing content, and no one really going to the source links of content and not knowing what's true, what's not true, heavy biases, what's subjective, and so forth. The problem was actually way larger, I'd say internationally, where like chat apps were already taking stronger form, things like WhatsApp, where I'd speak to people who were getting text messages from their grandma with a link or
Oh, I
paraphrasing an article,
remember those actually.
and they're presuming that these things are true. So I thought that problem was very, very fascinating, one which I thought that I could solve at the time, and I'd argue that it's probably worse today than it's ever been. So that problem hasn't been solved. And the second, which is kind of like where I anchored a lot of my career and still continue to focus today, is just online business models. Like I was very early as the internet kind of evolved from print and traditional cable, kind of like television, and the means by which we monetize those things and what we started to do on the internet, to what subscriptions started to look like and what subscription businesses could look like. And I just couldn't get over the fact that like these were the two models, right? Advertising and subscriptions are great models. They're a tale as old as time. But I felt that we're so lazy if we just feel like we could pull these things from, the existing kind of traditional markets where they existed prior and just pull those same models into what's happening with the internet when the internet is just so vast and open and just completely enabling the long tail and just changing the way we create, we consume, and so forth. So I believe that there had to be a different way or an evolved way to start to monetize people's work on the internet. And that's where I kind of like started to fall in love with crypto. Not to say like crypto is the saving grace by any means, but it just felt that it was early and undiscovered enough where we could be extremely elastic with what we could build and what we could do there. So those two things kind of surfaced from my experience at the Washington Post in the sense of like, if information starts to have a better like track record and you can kind of see how things were created and effectively like the entire lifeline of information online, do we start to change behavior? Do we start to enable more trust? What happens in that sort of experiment? And then the other is just like, what are new models and means by which we could start to monetize and take advantage of these things? And I jumped from the Washington Post in 2007 and started a company called Poet, which aimed to put IP on chain. Loved that experience more than anything. It was just way too early, like way too early, pre NFT hype, pre kind of like acknowledgement that people are excited about crypto, but it allowed me to get in early enough to continue to kind of expand on that work and see how it evolves to kind of where we are today.
Even right now, when it comes to like the IP side, there hasn't been many major developments that I've noticed in blockchain yet.
Yeah. So my opinion could be controversial here, but it's shifted. Like as you mentioned, my foray into crypto was all about IP. It was all about people are creating amazing things online. They should get value for the work that they're creating, whether that is intrinsic or extrinsic, like not even just making money, but just acknowledgement that, ideas and works are being created by these people and there should be value there. And I think that's where crypto still is today. Like we saw with like music NFTs and, we see with projects like Mirror and Paragraph that there's still a strong belief, and not to say it's the wrong belief, it's probably on the right side of history to try to give value and credit to people who are creating things online, more opportunity and more acknowledgement. But I've shifted my perspective and I don't want it to feel like it's giving up or it's negative, but I do feel like while it makes sense that we need to solve for IP, I don't think consumers really respect it. And I don't think you're going to change that no matter what you do. And I've seen that. I mean, I lived through it with Napster and the music industry. I'd pay $20 for a CD at my local record store, even if I only knew one track. And there's a lot of amazing things about that. Like most of my music discovery was like quite literally digging deep on artists. But all of a sudden with digital music, right, music became free, and artists were very frustrated by this, and of course the record labels were frustrated, but even artists, but like consumers were kind of like, we don't give a shit, like this is easier, I want the music that I want to create my own playlists. And that evolved to the next business model, which was streaming. But I feel like we're in a similar boat today. Like it's not with music as much, but it's with online content or, I used to say shit like tweets should be valuable. And, I did and do believe those things. But the reality is like the consumers are going to tell you what they want to do. And if the consumer are not respecting it or finding alternate ways, which is more accessible than ever, then it's a very difficult hill to climb. And I feel like, that has become more so permanent in my mind, which is there's probably different ways to kind of attack this problem, but just focusing on IP alone isn't interesting enough and isn't going to be widely respected enough for it to become a very, long lasting, durable business. I may be wrong.
Which also, when you see it like from a consumer perspective, it makes perfect sense.
Yeah.
It's definitely the back end that cares a lot more about IP rather than the consumer. And of course, both are important
Yeah.
to actually have that balance. And I'm curious though, like especially since you mentioned you were also an early investor into Mirror, Paragraph, and probably a few other on-chain media experiments. Would love to hear like what's innovations in business models have you especially noticed or you're really excited about that blockchain can bring to media in the first place?
Yeah, no, for sure. I think what's allowed me to kind of expand scope mentally is not having a US mindset as it relates to a lot of these things. Because I think what oftentimes we get stuck in thinking, or not we, because you're not here, but I'm here, me, many people here kind of get stuck in the ways of which like things operate in the United States. But the reality is that, the way that things operate here is not the way that things are operating, whether it's in like LATAM or APAC or so forth. And oftentimes it's a larger challenge for those demos and geos to monetize and do things creatively. Like one example that I realized recently is like, there's so many creators online, that kind of like opened up with YouTube, and now you have Substack and you have all of these other platforms. People could create a podcast, people could do whatever they want and monetize. And when you sponsor those things, or when you're trying to create those things, right, the pay periods in the United States like aren't that long, right? You could do like a 30-day pay period, like if you're doing a brand campaign or if you're creating stuff on the platforms like YouTube or Facebook or so forth and getting payouts. But globally, it's a different structure setup. Like globally, it could be 45 days, it could be 90 days. And I've found that there's a lot of really cool benefits to blockchain as it relates to credit, lending, how creators could get more payments up front in order to kind of like do the work that they want to be doing. So much so in the traditional loan process where they're forfeiting a lot, but just doing like really interesting things as it relates to like being able to take capital, having liquidity pools. I'm starting to see more and more companies start to do that around creators, small, medium business in geos like LATAM, Kenya, Philippines, so forth. I think the stablecoin structure setup, I mean, it's an obvious answer, but everything that's happening there, I think is going to be remarkable for just global commerce in general, especially as it relates to creators, like not having to worry about currency exchange, not having to worry about kind of like payments across the board. Like you're going to be able to have this kind of universal type structured setup that isn't necessarily limited by where you are and who you are. Those things I think are going to really start to open up a lot more. And I'm seeing that. Like I'm seeing that on payment on ramp, off ramps. I'm seeing that with credit lending. And again, those aren't like businesses that you'd be like, oh, that's a creator business, because with creator businesses, we're so used to the fact of being like, okay, like what's a content management system? What's a distribution system? What are analytics? Like things like that, which are kind of like services and products. But I think the notion of like what financially could be done, whether that's being able to get paid earlier, being able to take payments, cross border, being able to do things in a more fluid way is going to open up people's ability to kind of create businesses around themselves. And that's kind of what's been getting me more and more excited. I still love the notion of NFTs. Like, I think as a primitive, it should still be leveraged and used. And I think we're in like the early innings of starting to figure that out. But again, when you have kind of like a US based mindset, so much of the opportunity is contingent on getting wider adoption with like incumbents, like trying to get like Universal Music on board and CAA and, Epic Game. And when you kind of have a more like macro look, a more global look, then you're starting to think more about servicing the individuals who could actually leverage these things rather than just trying to get this in the hands of brands.
Which honestly, like, I love how the way you put it in the end, like, really, rather than going for the macro companies, the big companies, going to the actual specific individuals, that is also a massive unlock blockchain makes. Because
Yes.
at least also from my perspective as well, it allows for a lot faster startup period and a lot faster testing period and even getting funding through that process. One interesting model that occurred that while we were talking, that I saw KF Media. They're a media company, like crypto media company in LATAM.
Okay.
They're testing a learn to earn model, which essentially like with blockchain, they're creating pools where I believe sponsors can deposit tokens and similar, and the yield goes to the people that, for example, go inside of a course or consume some part of the media that specifically caters to a specific interest and is made for that. So it's not necessarily news content. And the media company also gets funded from the yield.
Yeah.
I just saw it as an interesting way of doing things rather than the traditional one-to-one advertising.
For sure. I think the catch 22 as well with crypto and creators to date has been, and this is natural because crypto is financial, is that there's such a strong emphasis on making money, and not just creators making money, but also consumers and participants being early on creators and being able to get value from creators and so forth. And where I think crypto has struggled in that journey is that there are so many people who value social capital more than financial capital, because if they could earn and accrue social capital, then they know they could monetize later. And I think we've like seen that with the social networks today. It's like, you know, to be fair, Elon just turned on payments for like X accounts, right? Like a year or a couple years ago. But prior to that, you know, there was like this rallying cry from crypto that's like, hey, you have 100,000 followers, you're creating all this stuff for Twitter, you should be getting paid for it. But the reality is like, if you ask any of those creators, they're like, with this 100,000 followers and what I'm creating, I could then monetize through a course or through a podcast, or I could create a newsletter. And there's like way more downstream effects when you're able to kind of get that mind share and open up the network kind of in the top of the funnel. And that's where crypto, I think, has kind of been somewhat limiting in its ventures so far as it relates to kind of like creator platforms and creator tools, because you're immediately trying to get people in the bottom of the funnel. And when you're like meeting people, you know, with finance in the front, then you really are limiting the opportunity to be able to kind of like scale to a broader audience and broader distribution. And I felt this way with music and crypto very early on. Like in 2020, 2021, the big theme with music and crypto was like, you should get a stake of your favorite artist and earn from your artist, right? If I'm a top 5% listener of, you know, Bruce Springsteen, I should be earning some royalties, or, you know, there should be more of a financial like exchange between artist and fan. But I never felt that made sense. I mean, on both parts. One was artists, and again, like maybe long tail artists, but top artists don't think about Spotify as a money grab. They think about Spotify similarly, as I said before, to like reach as many people as I can, get on the right playlists, and then sell concert tickets and get people to go to the show. And so many attempts early with crypto were like, you should be making more on Spotify. Your streams only make this much. You should move it over to this platform. You should move it over to this platform. Well, what happens is, sure, you may be making 5x the amount of money you were making on Spotify, but now no one fucking knows who you are and no one's hearing your music. And my thought process as it related to crypto very early on in music was like, crypto being inherently financial, people want to spend money, right? And I'm a huge fan of many artists in music, and I will spend more money on my favorite artists if I could get more value out of those artists. So whether that's acquiring collectibles or being able to get pre-sale tickets or being able to have an experience where I can meet the band, there's so many different things that could be done there that could increase kind of the pie for both creators and how they could monetize, and also the value that I'm getting as a fan. But what that consists of isn't necessarily me making money from my favorite artists, because that's not what I'm in this for. What I'm in this for is to get a better experience than the next person and try to engage deeper than I've ever been able to do before. So like that's like a prime example where I think crypto doesn't necessarily need to be binary with the existing platforms. I think using music for an example, artists should be on Spotify, they should be on YouTube, they could create a Substack, they should be doing everything that they want in order to be able to like reach their fans. But then think about kind of crypto platforms as a way to just drive those super fans and bottom of the funnel in. And what can you give them? Can you give them pre-sale tickets? Can you give them access that they can't get otherwise? Can you create like digital experiences that they can't get otherwise, and then start to monetize kind of like further down the funnel? So that's where I think a lot of the challenges have been, which is like really trying to like force something that isn't necessarily a standalone, but could be additive to existing experiences. And that's where I think crypto could start to thrive and continue to thrive.
One evident thing that has occurred to me multiple times is the massive push on collecting social posts,
Mhm.
which even from the start of crypto, even on Zora and stuff, I think they're really cool platforms. I mean, we're there. And also to your previous point, almost always for the network capital
Mhm.
rather than the actual minting capital or whatever is generated there. But it never seemed like as the right thing to do because it doesn't come natural. You kind of have to push people to collect the posts. And it seems like it has happened over and over and over again, but the entire space continues doing it for some reason.
Yes. Yeah. Well, crypto, I talk about this with my partner, Jonathan Moore, all the time. Crypto, as you know, has cycles, has hyper bullish cycles where there's probably over exuberance of spending and energy. And then it starts to, simmer and calm down. And I think a lot of founders and platforms have thought about crypto development as a means by which to capture those high velocity moments, meaning like when NFTs are booming and OpenSea is on fire and you know that like people are minting NFTs and collecting NFTs, you as a founder are oftentimes going into that market, if you're building in that market, saying this may not last, right, a year or 2 years, but I'm going to try to get as much shit as I can out of this moment as possible. And I don't think that has to be the case. I just think that's been what we've been trained on. That's been the existing kind of like crypto consumers to date. And I do believe in these kind of like more long-term durable businesses where patience matters, but you have to build things that like people want, people need, that service these customers that they'll use, continuously for a long time, regardless of whether they're being incentivized or being sort of paid to do so. So I think that's like a cultural thing thus far that we've seen through crypto, that even though I think a lot of people have talked about this for a long time, people still go that route. For example, prediction. Like if you ask anyone what they're interested in as it relates to consumer right now in crypto, they're going to say like stable coins, prediction markets, like the same shit that's already popped off. They're not necessarily forecasting what they think is going to be next, right? And I think that is that is just a result of kind of like the mindset and where people have found quasi success to date versus kind of having a more long-term structural type setup, which oftentimes the businesses could feel a little boring or may not feel extremely crypto or primitive crypto to the point where like it's nuanced enough, but eventually you get there. Like that's, I think, a continuous cycle that I'm hoping that we break out of.
So it's really like moving towards what came to mind was like the Apple approach, where you do take a bit more time to build something, but up until you really understand it, does it really make sense to get it out there?
Yeah,
And of course, as I completely agree with your point as well, that there's these hypes and trends that oftentimes founders jump onto, and it's absolutely useful to ride those trends. But what is the right way also to go on the trend without sacrificing the initial goal that was out?
for sure. And I think we're actually in a great place now. Like, I'm actually amazed how many coins have like $100 million plus market caps, $1 billion market caps. It's like, how the fuck is there so much capital, right? Like flowing through all of this. But I think that's also a sign of the fact that like crypto has really expanded. You have a large stablecoin category. You saw with the pump launch that even like when Pump launched their chain, everyone was like, memes are going to die. Memes didn't die. Like the liquidity that was buying into the memes is still buying into the memes. And then the liquidity that bought into Pump seemed a lot more kind of like institutional and people that would buy layer ones and VCs and so forth. And I think that's just an example of like the breadth and depth of everything that's happening here. As of 2 weeks ago, NFTs were dead. Last week, NFTs are completely revived. I think like I forgot what the floor is for punks right now, but it's at least 50 ETH.
Literally, one person bought 59, if I'm not
Yeah,
wrong, crypto
yeah,
punks, and like
right,
everything's revived.
right. So it's not. It's like I think in 2017 and definitely in 2021, you would see liquidity move a lot more, and when liquidity moved, you'd be like, oh, this other thing is dead, right? Like in 2017, it was like, I remember this, like everyone's on Binance buying ICOs. That's where all the energy was, right? That and like BTC and XRP. And then in 2021, all the energy is going to like NFTs and people are buying NFTs, and that's where the liquidity is going. You kind of felt like that was going to happen with meme coins this year because there was just so much volume and so much liquidity in there. But you're seeing just the growth, steady growth and comebacks of like all these other categories as well. And T is Soul, all ecosystems. And I think that's just a testament to how much this industry has kind of grown. And it should be exciting for founders or people building in the space, because I don't think you're necessarily competing with the entire market like you used to when the market was smaller. Like now you could be competing within a category, but you could always win within those categories. It's not like if you're building something in stables, you have to worry about the NFT market or you have to worry about what's going on with Bitcoin. Like there are vast markets now with vast liquidity that people could start to take advantage of. So that I think is a great sign of growth as it relates to this industry.
How do you think, and especially like with the recent developments, like there's these different markets, and even Base right now and Coinbase are doing their own thing with the Base app, which in turn like is very focused on creators and the media and everything on chain. What are your thoughts, projections, or what are you the most excited about with the on-chain media space? Or will there ever be like an on-chain media space, or will it be something else?
Yeah, no, like I think I don't have a good answer for whether I think on-chain will be isolated, which I think has been what people have been trying to do to date. Like even I tried to do that with Poet. Like when I launched Poet in 2017, the whole idea was let's put media on chain. And the work that I had to do was trying to get our API integrated into existing content management systems so that the first path to publish was minting. And then you could take advantage of all of the other kind of elements of it. I think a lot of the efforts are to have crypto be core and thus it being somewhat isolated in its own kind of like arena, which I feel like Base is doing. And Base could grow fantastically in doing that. But if you spend time on Farcaster and so forth, like it's very similar people who understand the space. There's some newcomers coming in, but it is people who are there for that, who want to take advantage of that. What I want to see is how that inverses, like how we start to get on-chain products and experiences integrated more so in the wider distributed platforms. I was excited about Blinks. I saw someone tweet the other day, like what's happening with Blinks. That was Solana's.
What is
So Blinks was like Solana's version of, what was it called on Farcaster? The embeds.
Frames?
So Blinks was Solana's version of Frames that effectively could be leveraged and used throughout broader like networks. Like on Twitter, you could basically embed, like a frame and start to leverage those sort of things. I haven't seen that as widely as I expected. I don't know if that's because there was a focus on desktop and more people are mobile, but those sort of actions I get very excited about because I think those do have the opportunity to take off. What we'll see is like the low hanging fruit is like platforms leveraging stablecoins and being able to use stablecoins that effectively combine like point systems and currencies to kind of exist within their own sort of environments. But I do believe that we are going to see more of an encroach of these things kind of going more deeper into the space. But it likely has to happen by the means of which Base is doing and what Farcaster has done, which is we have an environment, there may be 10,000, 20,000, however many users. And this is how they're leveraging and using these products. And oh shit, this is actually cool and could be valuable. Then let's start to see like wider adoption and things go outside. I'm like, I don't know if I'm just like burned from many years of doing this, but like, I don't know how I feel about minting content. Like, I think a lot of issues continue to persist. Like one challenge that I had with Poet was that we had a goal of putting all content on chain because that would be amazing to have like a repository of content, whoever created it, be able to have provenance of that. The issue is that we have hundreds of years of content that's already been created that isn't going to be organically created through the blockchain. So, what happens when a new platform comes to mint content on chain and, I'm a bad actor and I just go and take optimism content and just mint it and say I did it. And you're going to say, no, you didn't. And it's like, well, I minted it, right? So there's like layers and layers and layers of challenges as that comes about. The best way to probably go about it, which is why I loved what like Mirror's doing and why, I like what Forecaster's doing, because it's like, look, like you may not need a solution for that in order to show that this stuff is valuable. Have the starting point go now and just see kind of like what gets delivered and what gets built by that. And I think a lot of things have been done over the past like 4 or 5 years that are awesome. Like splits were awesome. Being able, like, traditional micropayments don't work. I firmly believe that. I firmly
Just in
believe that.
video games, to be
Yeah,
honest.
right. But for the most part, I believe they don't work, not because like people won't pay $1 or $2. I just think it's an extra step, and it's like cognitive load that people have to think about something and they're going to be like, I don't want to deal with this, right? So like it's mainly just like a user experience convenience type thing, I think, over anything. But there are means by which that could start to become interesting. What Zora is doing now, I think, will start to become like interesting. Like, let's see, can you credit creators? Can you drive back payments? Can we create a very unique way where maybe the fundamental functions of that are created through Zora, but then if things are monetized through YouTube that originated in Zora or so forth, then can you have the capital flow back in and then leverage blockchain rails to then do payouts and things like that? Like, I think people will start to get more creative and thoughtful with those things. But that's kind of like where I think things need to go. I think there's frustration that people feel like, okay, like there's only so many people on this platform. It's so isolated. How many people are actually using it? It's a fair criticism, but only through that are we going to actually see what opportunities unlock, which then will gain the attention of a broader base. Because when people start seeing other people driving success through these things, they're going to want a piece of that. And that only happens when there's like a starting point. And that starting point may be small. And I think that's okay.
Yeah, but that also makes perfect sense though in the end. Like, and it's really exciting that Zora and also Farcaster now, they're experimenting with different things that haven't really been tried before. And personally, I find that really, really interesting because it's something completely new that can also bring not only an innovation in how things are done, but also like if you niche it down a bit more, there's an innovation in business models that can really happen for these companies that can make the user experience a lot better
Yes.
and just tackle a lot of challenges along the way that just happen to be on the way.
Yes. Yeah. Yeah. No, for sure. I also think that, like, we've just existed in a world where like tokens are so critical to the power of blockchains, and so many companies are just launching tokens way too early before product market fit, before things are set up, and then you effectively just have like two customers that you have to cater to. Like, you're not just building your product anymore, many of which have not even been in like the fourth inning of building their product, but have launched a token. And now all of a sudden you're dealing with Telegram buyers that are pissed about token price and want to know when it's going to go up. And you have to, forfeit attention from your core product and what you're actually building in order to accommodate that. And it's very difficult, like an extremely difficult task. So I think that's also been kind of like a very unique challenge that happens within crypto, because I think people are excited about launching a token. They could even have a design that fully feeds back and shows a ton of value and how it exists within the ecosystem. But then as a founder and as someone building the company, your attention starts to get completely diverted into a bunch of different means by which like you can't focus solely on like what you originally set out to do. And I think that's been a learning curve that people have been seeing others do and hopefully adjust based on that. But that's also like a huge challenge building in the space.
On that point, the perspective, because I'm also someone that likes doing a lot of different things, but at the same time, what has been really helpful, and also by talking with people, what has worked in the past is like rather than diverting the energy and treating it as traditional marketing, where okay, you do the token and there's one target audience, and you have the product, which usually has another target audience in crypto, which already is super complicated. Maybe just focus, and I think Jesse is pushing that quite a bit, is just focus on sharing what you're doing. And it might not have that crazy pump, but you can sustain everything with that.
Yeah. Yeah. I think it also goes back to what we were saying earlier, which
It's,
is I think for base to be successful, they have to focus on distribution and the social
yeah.
capital, right? Like just being a creator and getting paid, $100, $50, even $1,000 isn't necessarily going to be enough for people to feel fulfilled in growing their brand or growing their business. Like they're going to need that distribution. They're going to need to know that there's an audience there, especially if the goal is to take people away from Twitter and the other platforms that they were leveraging and using and bring them over here, because that sort of broad distribution is very difficult to compete with against companies that have been around for a decade and have just mastered kind of like that sort of behavior more broadly. So like that's something too, which goes back to what we were saying, which is like in crypto, there's always an overemphasis on like people just want to make money. People do want to make money. That arguably one of the most important things, if not the most important thing, but they don't just need to make money directly. They could also make money through influence, and through influence that happens with distribution and social capital. So.
But there's not much, even if you see it like and not just in crypto, but in any industry, like the business models of most businesses are quite bland and flat.
Yes.
Like if you consider that type of thinking where, okay, now I have all these different assets that I never even considered before, then it's a different type of question. But there's not much, or at least I haven't seen it, other than a few individuals that talk about it in that way.
Yeah. Yes.
It's mostly the straightforward path, when the actual more organic path is the path to making things, to getting.
Yes. Yeah, for sure.
My next question is also, I'm going to go back a bit more to the media aspect. And also, since you were an early investor in multiple on-chain media companies, would love to hear, like, first of all, what are the things that excite you in sense of, if you're still looking for investments in on-chain media, what are you really looking forward to, and what are you focusing on right now on a more personal level, let's say?
Yeah. I'd say the biggest things that interest me in media now is probably way less like creator tools and way more around the business model. I think mainly because we've developed a lot of the primitives, I think, that are interesting as it relates to like what's native to crypto on the creator side, like whether that's minting, whether that's putting things on chain and having more public data, whether that's data sharing, whether that's splits and royalties and things that can be developed out of that nature. I feel like there's a great foundation for that already. I think the biggest hook for people to get excited is going to be invention of revenue models or expansion kind of like of existing revenue models. And by revenue, I don't just mean like how the money comes in, but I also mean like how things are funded, how people could get capital in order to develop things on a wider scale. So what I look at today, I'm always paying attention like to the outputs, which is, okay, like how are people leveraging crypto to make money? Are they launching tokens? Are they thinking about different like incentive designs and mechanisms that, reward creators or consumers, whether that's around like consumption of content or distribution of content and so forth? I get excited about those and pay attention to those a lot. I do think it is a non-linear path to take advantage of crypto as it relates to these things as well. And I think that has to do with the inputs. I think that has to do with how people fund their works. Is there going to be a world where, well, there actually is a world right now. Like most people that want to build in media and crypto, I think, have a very difficult time fundraising, because I think a lot of the VCs are just focused on very similar things. It's like, what's the next L1? How can I get liquidity? What's going to launch a chain? What's amazing about that stuff is like most of these L1s are very, very, very similar. And there's very little nuance to like what differentiates them. And they're all in search of apps. They're all like, how do I get the right apps? How do I drive users to the, to my chain? And then all those apps are the same. It's like everyone will have a prediction market app. Everybody will have an app that does, dot fun, right? Like there's like, it's the same shit.
But so sorry to interrupt you, but also like to your last point, like when you mentioned distribution, even if it's the same stuff, the one that will actually build something lasting and meaningful is the one that's going to have the most distribution. Because if you can't get enough eyeballs, like you can have the best product, nothing's going to happen.
Yeah. So yes, exactly. So what I think is actually like probably the most interesting arena for this is Bitcoin. And I say that because Solana and ETH and these like kind of like layer ones, they are highly dependent on apps in order to increase distribution and value, right? So, you've seen it with Solana, like Pump Fund, Jupe, these apps have driven, right, Solana's adoption and interest in Solana significantly. Similar to ETH, right? ETH, you had OpenSea, NFTs, now you have RWAs, tokenizing everything. The app functions are very critical in order to drive broader use and distribution. Bitcoin is already king of the hill, right? Like Bitcoin is in the hands of the most people, right? It's institutionalized. People are buying ETFs. People are buying Bitcoin globally. It's just been around the longest. And for some reason, the app development on Bitcoin has been so like pocketed. Like they're like most innovations as it relates to apps don't happen on Bitcoin. They're happening on like Solana or ETH or other chains. However, Bitcoin is the most distributed. So the role of apps for Bitcoin is just to capture that value. People already have Bitcoin. They're like, now what do I do with it? Right. And there's not enough apps or development to like capture that. Whereas on the other side, the role of apps, ETH, Sol, and so forth, is to increase distribution and to increase the use of Solana and Ethereum. So it's kind of like an opposite sort of situation. And again, it's just my take, may not be right, but I get excited about people that are thinking about Bitcoin and how to start to leverage Bitcoin, because I feel like that already has casted a massive wide net top of funnel to just drive value down to people who already hold this. It probably mostly stays in their wallet and they want to kind of think of like new things that they could leverage and do with it. So that kind of is an area that gets me excited, where I think there could be a lot of development and a lot of opportunity.
Thank you for sharing that, actually. I haven't considered it from that perspective, but it makes perfect sense. Like the Bitcoin distribution is already there. It is the king of the hill, as you said, and it's about capturing that distribution, making something with it.
Yeah. And it's interesting. Like you see, like traditionally, like, NFTs came out on ETH. OpenSea was the largest player. Then Sol did some NFTs, and you had Magic Eden. And then all of a sudden you had like dead last was Ordinals. It did great, but they were like the last, blockchain to do NFTs. And, similar with stablecoins. It's like there's like some peg stablecoins to Bitcoin, but for the most part, it's ETH, right? And then, like we invested in Sphere that's doing things on Solana. And then on Bitcoin, it's like hard to even identify like which the majors are, right? And for some reason, it just keeps landing there. And I don't know if that's philosophical, like people believing, like I'd say arguably Bitcoin probably has kept its ideals more than any other blockchain. Like I tweeted this yesterday, but many people are like, crypto's going mainstream. This is a massive moment. Like, mainstream adoption is here and the broader market is accepting it. It's like, I would argue that like crypto has broken its idealism in order to enable that versus mainstream adopting the ideals of crypto. Like I think crypto has gotten way more comfortable doing less, becoming more centralized, doing things where there could be wider adoption. So it's an interesting task. I mean, but again, like if we're going, if the theme is distribution, like that's right. Like I think that's why stablecoins will be successful, because stablecoins are going to be widely distributed. But Bitcoin is already like fast on that path, and people want to do stuff with it. And that could be as simple as like yields and earning interest, or that could be lending, or that could be, stablecoins, or that could be basically anything to be tried out and used.
The other thing is like also compared to the other chains, even L1s, like leveraging that on Bitcoin even allows for multiple players to play on the same distribution because it's just so vast.
Yes. Yeah, exactly. So I think there's opportunity there. I mean, that's kind of like to give you like a non-traditional answer to make things interesting. Like that's where I think there should be. I'd love to see more people kind of like looking over there or thinking about that, even if it's in isolation or integrated.
Awesome. Jarrod, is there anything else that I should have asked you that maybe I didn't so far?
I think as it relates to creators, my perspective on timeline is it's still so early. Crypto comes with a lot of baggage that I think has, and this isn't like news, but has consistently kept people away or from embracing it. And I'll give you an example, like Circle IPO. The Circle IPO went bananas, and a lot of the narrative on Twitter and in the market was like, this is such a clear sign that people want exposure to stablecoins. And I was like, I don't think so. What I think it really is that crypto has consistently had two challenges. One is scams, people just thinking that anything that they engage with, even if it's Bitcoin, could go to zero and there's not a lot of trust there. The second is security. It's like the means by which I have to do this and I have to hold this. And even though we've come such a long way and it's very simple to custody crypto at this point, people still are just like have the narrative in their head and the perspective in their head that like security is tough, managing this is tough. I just don't want to bother. And why I think Circle blew the lid off was because I think people want exposure to crypto, but they want it in a more traditional means. They want to buy it through the stock market because even though it may not be safer, it may not be more trusted, none of that may be true, just feels that way because it's been established for longer. And I believe that's paramount throughout all of crypto still. Like I think still those challenges are going to persist for a long time. People being concerned with security and people being concerned with scams. So the biggest thing that we could do, especially on the creator side of the business, is just to keep trying, like keep trying to put things out there, keep trying to validate, the positive effects, right? Of let's say like what could come out of this, either through funding, through monetization, through community. And through those reps, things will start to become a lot more apparent and a lot more adopted. Hiccups along the way, like music NFTs. Like, I don't know why the other day, like there was like all this mea culpa on music NFTs came out of nowhere. Like everybody's saying like, I'm sorry for pushing music. It's like people should be sorry for pushing it, like just because it didn't happen. But like, there is the relationship on that side with the high velocity and durable moments where like, yes, maybe like at a moment in time it was valuable, but it's not durable and long-standing. And, maybe it comes back, maybe it doesn't. But if we don't continue to lean on those attempts, then we're never going to be able to break out to be able to really see like what the true kind of like innovations and opportunities are that come out of this. And that's where I would just strongly emphasize people to continue to try. I also think a lot of people are probably discouraged building in the creator space, either because it's hard to get funding or they see the success of like a pump fund where people are just trading meme coins and they're like, why don't I just create a meme coin? Or, people doing things with like RWAs. Well, why don't I just do an RWA? And I think if we start losing creative people in the space, building creative products as it relates to like what the broad part of the internet is going to use this for, then that's a sad moment for crypto and puts us at a disadvantage as well. So I still think it's early innings. I think people should continue to kind of like push and experiment and do things because I think it is inevitable kind of what's happening here. And those opportunities are going to show up a lot faster if people just continue to push. So I'll close with that.
Makes perfect sense. Awesome sentence for closing. Thank you, Jarrod, for joining us on the Optimism Show.
Of course. Thank you so much.